the Financial Survival Network, helping you to survive and thrive in the new economy. Get your free financial survival toolkit and find out where to buy gold and silver safely at great prices. Sign up at financialsurvivalnetwork.com. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold since 1990, and I'm a customer because when you buy, they ship. To find out more, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. Markets, volatility, gold, silver continue to get slammed and trying obviously to undermine confidence in the only real form of money. We've got Nick Santiago from InTheMoneyStocks.com. We're going to talk about the movements in the metals and also the stock market as well, what's going on there, how they're connected. Hey, Nick, welcome back to the Financial Survival Network. It's great to have you on.
Great to be back, Harry. Thank you for having me.
Always a pleasure. You know that. So what's going on here? I mean, the jobs report comes out, so you expect the thing to get slammed. Gold prices, it's a 1-to-1 correlation. I don't think that anybody could argue with that. So certainly the jobs number was not good. So why does gold get slammed whenever there's a good or bad jobs number?
Well, right now, gold is getting slammed for one reason, I think, in particular, is because the dollar is getting stronger. And more money is coming into the U.S. dollar index as this Asian crisis starts to spew over from China. And you also have all the problems going on in Europe. So as the dollar gets stronger, gold will go down. But gold looks like, this is the final leg here. Last time I think I was on your show, I had talked about gold topping out and making a real nice long correction into the fall season. And that looks to be right on target as we spoke about the last time.
Well, it's certainly easier to keep a handle on markets in the summer because there's less volume generally, right?
Well, there is. There usually is less volume, but that, we go into a summer doldrum generally in the month of August. This year, though, you would think that the volume would be heavier just on the fact that we're having all of these central bank interventions and so much, the crisis in Europe is just getting bigger by the day. The one thing I think that we should note is that a lot of people are getting tired of the stock market in general because of all the shenanigans that are played. Basically we have another MF Global on our hands today. People are just getting, the individual or retail investor is just getting tired of that. So I think that's affecting a lot of the volume trends as well.
But let's go back, and this applies to gold and to stocks, right? The whole point of an investor not being tied down to a trading system and rather being able to follow a broader trend can really bring a lot of advantages that Du Bois don't have, right? Absolutely.
No doubt about that. You always want to be able to, what I do is I apply charts and cycle work. That's been my saving grace in this market, and it's helped all of our members really navigate through these markets quite efficiently, and we've all done very, very well. Without that, I don't know how somebody that doesn't have that knowledge can make it in this business.
Right. And so right now, you're Joe Sixpack. You got a little bit of money. What's the safest thing, in your opinion, Nick, that you can do with it?
Well, right now, to be honest, if you don't know how to invest, you get ready and you start to buy some gold and silver, as we get into the fall season. Gold looks like it's starting to put in a nice little bottom here. We're already into mid-July, so you're basically looking at about 2 months more of downside potentially, and then it's going to be time to own that. That is one thing I think everybody should own, even if you're not an investor, just because we never know what can happen with our money. Historically in the past, every fiat currency has gone bust, And I don't know what makes people think we're special and that it won't happen here.
Well, I think it's those presidents that are on the paper that they just make you feel good about the country, you know?
I think so.
I don't get it, you know, because my feeling is about myself and about the country. I don't think I'm the smartest guy in the room by any stretch. I might have a little more common sense than some. I might have a little bit more experience than others, but being the smartest guy in the room, you wind up like a Paul Krugman, and that's never who I want to be. I mean, there was just a great slam down of him that's up on the site on financialsurvivalnetwork.com. The Spaniards literally eviscerated this guy, but for another day. For people that want to buy small amounts of silver and then they kind of accumulate and ship, go to Financial Survival Network and send me an email. I'll send you a link to this great program recommended by David Morgan. I mean, I'm a member of it. I buy a little bit of silver every month. It's the greatest thing. So I think that's a good move. As far as in the stock market goes, you got to be nervous right now, huh?
Well, not really. I mean, if you know what's going on here, you know that the markets look like they're headed lower. I mean, there's really no real reason to be invested on the long side, and you just wait for bearish setups. You could short the market, and then when there's some type of really what we trade in the stock market now, we don't even trade stocks anymore. We trade inflationary news by the central banks because that's really the only way they can keep the markets going. And it's only a matter of time before they inflate this thing again. For them to do it now would not really, they would not get the most bang for their money creation. But they'll probably do it this fall, and that's really going to send gold and silver to the moon, in my opinion.
Yeah, what I'd like to know is that $16 trillion that they printed up during the last crisis and shipped out to banks all over the world, where did that money go? Was it paid back? Are they getting interest on it? I want to know all these things, and nobody seems to have an answer here, Nick.
Well, all you got to do is know that the Fed funds rate, which is the overnight lending rate to 4 banks in the United States, has been at 0% since December 2008. That should answer your question.
Okay, so yet again, we're getting screwed. That's what it comes down to.
That's how it works. I mean, there's nothing. I mean, this is the way it is. I mean, you have to, But the good thing about it is you could get in the market, you could get educated, and then you could try and make money. And as you accumulate money, whether it's in the stock market or the bond market, you go ahead and you buy some gold, you buy some silver, and you protect yourself, you protect your family. That's really how you have to do it these days. But that's really what it comes down to. The banks run the show, and they've run the show for 100 years already.
Since the founding, arguably. Certainly the War of 1812, they basically stopped it because they refused to loan more money to the government. At least that's one story that circulates. But, it's kind of disheartening to the general public to see that they're just vassals of the financial superstate, because there's no difference between Wall Street and Pennsylvania Avenue. They might as well be connected to each other. They run into each other, right?
Well, they are. Don't they call it government sacks?
Yeah. And so I guess if I had to sum up your belief here, we're in a wait and see. It's obvious they're going to have to print money because there's a deficit. How else is the deficit going to get paid? But then when we go into the next economic collapse here, the next banking fiasco, and how far off is that really? We see the stress fractures with JP Morgan, and no doubt other banks will be releasing their losses from trading operations shortly. So it was 16 trillion last time. Is it going to be 100 trillion this time?
Well,
I mean, how much can they do?
Yeah, who really knows what the real number is? I mean, I once heard John Najarian on CNBC said that these banks have, hundreds of trillions of dollars in bad derivatives on their books that, they don't have to show. So, I had a chuckle at that, but you're talking about hundreds of trillions. It's just the numbers are just so staggering when you think about them. There's only one way out of this, and it's called growth. And as long as you keep pretending that you can bail people out with more debt, there really is no solution. The solution is bankruptcy.
Yeah, liquidation of the debt, deal with the debt, and get down to, it's just when numerous countries have defaulted on their debt, initially nobody will sell them any stuff. They can't get any credit. They get their debt levels down to attractive levels like Russia today. And then the market forgets all about the fact that they defaulted. They come back and they're stronger than ever. And the fact is they really shouldn't be in the debt markets anyway. It's a bad habit to get into. And once you get into it, it's real hard to get out. So,
absolutely.
Yeah. So Nick, any particular mining stock or metal stock that you're really fond of right now?
Well, not at the moment, but I tell you what, I will like the GDX, and that you could buy the basket. They'll have every mining stock under the sun right there in the fall season. Also, I always like the CEF, which is Central Fund out of Canada, which is half gold, half silver, and I think that can be bought sometime in the fall season. Probably, late September, early October. I think if my timing is correct, that's going to be the opportunity there. You probably get that around $18 or so. And it's very, very stable, and I like it much, much more than I like GLD or any of those other vehicles. I think the CEF is very, very solid.
Yeah, it sounds good, and I got it. In the interest of fair disclosure, I own some of it myself. I've owned it for years.
And I do as well.
Going way back to almost when it was in single digits. So what's it at now, 19-something?
Yeah, 1937 today. I'm in there single digits myself, pal.
Yeah, I don't even really look at the prices day to day because, it's fun when they're going up. It's not fun when they're going down, but, this is all noise right now, and I think that's what you really have to understand.
Absolutely.
Yeah, so
absolutely.
So inthemoneystocks.com, you've got a blog on there too, don't you?
I do. You come over and read our blog. It's called the Rant and Rave blog. That's free. Also, I put out a morning video. My partner puts out an afternoon video. There's a lot of free content here for everybody. And also, Terry, we offer a 7-day free trial to our services, so people could come in and just go back and look at the archives. You'll see our track record on there as well. You think people will be happily impressed. And, it all comes down to cycles and chart patterns. We don't have the privilege of knowing exactly what a central bank's going to do, but we have the privilege of reading the charts and knowing where the money flow is going. So that's what saves us. That's what helps us each and every day. And I think all traders should get educated on the technicals.
With you on that, brother. And hey, thanks so much for coming on again to hear this interview with Nick, as well as the other ones we've done, financialsurvivalnetwork.com, and sign up for the free weekly newsletter. Nick, we will talk to you again soon.
Sounds great, Kerry. Have a great day.
You too.